$900 a month. That's what many people are paying just to sit in traffic. Not for a house, not for investments, not to build freedom. Just to drive to work and back. You stop at a red light and start noticing something strange. Half the cars around you cost more than $60,000. SUVs, luxury trucks, brand new crossovers everywhere. And somehow, the people driving them still look stressed about money. Still tired. Still checking bank apps before payday. Still saying, I can't afford to save right now. Because most people don't realize this. A car payment doesn't just take money. It quietly takes breathing room. In the next 3 minutes, you'll see why expensive car payments quietly trap normal incomes, and how to escape the system before it traps you too. The car payment illusion. A dealership never sells you a $60,000 car. They sell you $820 a month. Your brain doesn't process the total price. It processes the monthly number. $820 feels manageable. But over 7 years, that manageable payment quietly turns into $69,000. Human thinks, I can afford the monthly payment. Piggy Buck thinks, monthly thinking hides lifetime cost. The long loan trap. Car loans used to be short, 3 years, maybe 4. Today, many stretch to 7 or even 8 years. That changes everything. Lower payment, higher total cost, longer financial pressure, and something worse happens. By year 5, you may still owe more than the car is worth. That's called negative equity. You can't sell, you can't escape, you just keep paying. The upgrade cycle. After a few years, something happens. A new model appears, a bigger screen, better design. So people trade in the car. But the old loan isn't finished. The remaining debt gets rolled into the next loan. Now the new car payment includes the new car, the old car, interest on both. This is how normal incomes end up carrying $1,000 monthly car payments. Not once, but repeatedly. The real cost nobody calculates. The payment is only the first layer. Add everything together. Insurance, fuel, maintenance, repairs, registration. Suddenly, transportation isn't $900. It's closer to $1,400 a month. Over 7 years, that's over $110,000 spent on a machine that loses value every day. Human thinks, it's just transportation. Piggy Buck thinks, transportation shouldn't consume wealth. Why people still do it? Because cars are sold as identity, not transport. The message isn't, this gets you to work. The message is, this proves you're successful. Status sells better than practicality. And the monthly payment system hides the real math. The reset. Escaping the car payment trap doesn't require extreme sacrifice. It requires clearer rules. Rule 1. Calculate total ownership cost, not monthly payment. Multiply the payment by the full loan term before deciding. Rule 2. Keep transportation below 15% of your take-home pay. Above that level, cars start replacing savings. Rule 3. Drive cars longer than the loan. 2 years without payments builds breathing room. Rule 4. Delay upgrades by 90 days. Most must-have upgrades disappear when time passes. AI can help here. One surprisingly useful tool is AI budgeting. You can ask an AI assistant to calculate full ownership cost, compare lease versus loan versus used car, simulate long-term wealth impact. For example, ask, what happens if I invest my $800 car payment instead for 7 years? The answer is usually shocking. Sometimes that car payment could become $70,000 in investments instead. AI turns hidden math into visible decisions, and visible decisions change behavior. Quick pig recap. Car payments trap people when they think monthly, they stretch loans, they roll old debt into new cars, and they ignore total cost. Freedom starts when you measure the full price, limit transportation spending, delay upgrades, and let math guide decisions instead of emotion. Final thought. A car should move your body, not control your finances. Because the moment your transportation costs more than your progress, you're not driving the car. The car is driving your future.